Lynette Calfani is off for this week's installment of Financial Fitness, so we turn to Shannon Ryan of American Express Financial Services in Los Angeles to talk about some year-end tips. Welcome back, Shannon. It's good to see you. Appreciate you coming on. Hi,
welcome back.
Thank you. We want to focus a little bit on investor tips for year-end tax saving and financial planning. One of the things you've been urging investors to do and others is to open up their statements that have been gathering dust on the kitchen counter. Why you tell them to do it right now?
Well, what we're finding is a lot of people have their statements sitting on their kitchen counter, and possibly for 2 years that they've been sitting there unopened, strictly out of fear. And as we take a look at tax strategies towards the year end, the first thing people need to do is look at the reality of where their planning is today, meaning open up those statements, update your financial plan based on the realities of what we are looking at in today's market, meaning what are your account values today? Then creating a plan around what you would like to achieve over the next 10, 15, 20 years around retirement, college education for your children, and then determining what you need to save now, and then making your decisions around taxes. The interesting thing is that savings has really declined. In 1999, at the height of saving into one of the largest types of saving vehicles, 401ks, we were saving about 8.6% of our income, and that's been pulled back currently to about 7%. So it's a very large indicator that people are really stopping, and so they haven't been revisiting their financial plans.
All right, now the second thing you were recommending is to offset capital gains and sell some shares. Now, should individuals start thinking about this now, or should they wait to find out whether or not the Bush administration will push through increased loss allowances when Congress reconvenes in January?
I think it's important that we take a look currently at what our financial planning is, look at the decisions we need to make for ourselves and for our family based on our realities of where our portfolios are today. Make those decisions, make the changes that we need to make before December 31st. Many of the tax advantages that are available to us need to be taken advantage of prior to December 31st. We can't count on any lookbacks or any provisions that we may receive in January.
All right, now what about timing the purchase of new mutual fund shares? How do you go about doing that as we close out the year?
One of the things we need to be aware of as we're reallocating our portfolios for our future growth of our investments is that we're very cautious and we're aware of when those mutual funds will be paying dividends. One of the things that people get caught in at the end of the year is the ownership around mutual fund and when they declare their dividends, and will you owe taxes on those. So be very thoughtful in the process of buying and selling mutual funds at this time.
What else is on your mind right now as we close out the year, Shannon? What do you think people should be focusing on in a larger sense? I mean, we're trying to determine whether or not this bounce in the stock market is for real. What asset classes look most appropriate? What are you telling your clients these days?
Really what we're working with at American Express around what we're telling our clients is that it is absolutely critical that your current financial plan is updated and that it's based on reality, that you're taking a look at the numbers, where they're at, where you want to go, and then creating a game plan to make sure that you're systematically investing every month of every year and that you're not pulling back on your investing. What we're seeing happening right now with a lot of our clients is we're seeing kind of a storm brewing. First of all, people are stop their savings, or they're not looking at their investments close enough simply because they're concerned about what the statements may look at, and because interest rates are low, they're continuing to accumulate maybe bigger houses or new cars, so their lower savings, higher debt could possibly create some concerns for future opportunities around the ability to retire. So the big picture is look at your financial plan, update your financial plan, see your financial advisor and your tax accountant.
All right, Shannon, thanks very much. Appreciate it.
Thank you.
Shannon Ryan of American Express Financial Advisors.